I believe that stock investing, right, is actually best made, right, if we have an investment objective, we have a vision, we have a goal, we have an objective. All right. So this is actually very important because so many people, right, when they actually started to invest in the stock market, right, they may not have an aim or goal or vision. So what they do is that they just invest blindly lah. All right. So let's put it that way. So it's actually very important for us to have our own personal investment objective. So that is actually step number one. So these are my investment objectives. But the question is this, what kind of stock, right, that I should be investing into? They are supposed that can actually like support my investment objectives. So over here, step one is actually about identifying the objectives. Then we move into step number two, which is that I needed a system to actually identify the stocks, right, that fulfill the objectives as listed down above. So what I do is that I take my investment objective, then I move into step number two, which is investment system. And this system, right, will consist of 4 quadrants lah. All right. So I make it very simple because over here I tend to do things a bit simple lah. Okay, but it's actually very structured and very systematic. So for me, my investment system consists of 4 main quadrants. So the first one will be business. So this is where I will assess the business model of the stock. The second one will be financial. So this will be a place where I will assess the financial strength and the financial results of the stock. All right. Then subsequently, after I have looked into the finances of the stock, I will want to know what are the growth initiatives. All right, because what we are looking at is that we don't just want to invest based on past track record. We want to know what is how the stock is actually going to move forward in the future. What kind of initiatives are they participating to actually sustain their growth in the future? So this is actually where we will look into growth. And finally, last but not least, I'll be looking at valuation. So if the valuation is good, which means it's undervalued, then I will buy. If let's say it is overvalued, then I don't buy. So as you can see here, what we find out is that the shareholders' earnings, right? Can you see that the earnings have been growing over the last 10 years? So as long as we see this pattern, right? Usually if you see this pattern, the stock will be in dividend walk lah. All right, let's put it that way lah. Because anything without this kind of pattern, right, I probably won't put it in to the membership, which is dividend walk. All right, because it's a waste of time. Because my objective is to have a stock that pays me increasing dividends year after year. So how can a stock do that if they can't even make consistent growth in profits year after year? All right. So therefore, this is actually the logic. So that is why we focus on companies that have actually delivered this kind of profits, this kind of pattern over the last 10 years. Why we look at operating cash flow? There are 2 reasons for it. All right. The first one is that I'm a dividend investor. So without cash flow, where does my dividend come from? That's the first one. The second one is that I also want capital appreciation. Okay. And in order to get capital appreciation, the company, right, must invest for growth. So where the money comes from? Okay. So I will say, okay, maybe some companies will prefer to borrow from the bank to actually fund their growth initiative. But for me, I'm one of those people, right, who prefer the company or the stock to invest in these growth initiatives from their own operating cash flow. So that's why it's very important for me as an investor to look at operating cash flow.